Thank you so much, everyone, for tuning in to this week's episode of Mortgage Matters with Chris here. We have Chris Galley on the Galley team at Novus Home Mortgage. Chris, you have 26 years experience in the mortgage industry, real estate and mortgage industry both. And your wife works alongside of you with just as much time in the industry as well. So appreciate you being here. I personally am really excited about the subject we have today. I have to say this is a Florida specific one. So if you are one of our New England watchers or listeners or one of our Midwest listeners, I'm sorry, come back next week. Although it's fun. Maybe you have someone moving down here and you can advise them.
Someone moving down here.
That's right. But yes, this is very Florida specific news that we've got here today. So I'll just jump right in. So the Florida General Assembly and Governor Ron DeSantis just passed and signed into law a brand new bill called the Live Local Act. And this Live Local Act does a lot of things. It's multifaceted, and it addresses, I don't know if I should say the housing crisis we have in Florida, but maybe some of the housing struggles. If you're a Floridian, whether you're new or a longtime Floridian, you know that housing is like the big thing everyone talks about here. And it's not necessarily a unique Florida problem. Any major metro area is dealing with, a lack of housing, lack of inventory, in a lot of cases, lack of what, we'd consider affordable housing, right? And so this is a multifaceted bill that seems to try and address that kind of the crisis that we're dealing with. So the big news, which Chris, you'll touch on, is about the hometown heroes. But I did want to touch on really quick, just a couple other quick bullet points on what is in this bill. And I'll just go over these really, really briefly. So if you have questions or if you want to deeper dive into any of the points, we'd be happy to talk about that later. But the big thing, a couple of the big things is that the Florida General Assembly set up the ability for more tax credits, trying to incentivize buyers, developers, things like that, to making units, both single family and multifamily units, that will be considered affordable housing. And so there's a couple different ones of these. Some of them are targeted towards what they call extremely low income buyers. And then some of them address moderate income buyers, which, the moderate income buyers is where most of us sit, right? It also does some things for local government regulations, gives local governments more tools on how to make their communities more affordable. And then another thing it does is it completely does an all-out ban on rent control in the state of Florida, which is pretty significant. Chris, we could talk about, we could spend a whole episode talking on rent control, but we won't, because obviously we like talking about the home buying side of things instead.
That's it. When the rent just is going up at such rapid rates, it's almost a no-brainer to get your payment fixed and buy a home.
Yep.
Because I've seen, and you've seen in this last couple of years, people's payments double for rent overnight double. If I'm paying $1,500 and then I'm told by my landlord I'm increasing it to $3,000, and I'm budgeting $1,500, maybe $100 more a month or $200 more a month. The increase is kind of, gradual, but you're just dropping the hammer on you. It's life-changing. It's forcing people to have to move from where they live, and they're looking for other rentals. And then what happens? The rentals that they're looking at are also increasing, or they have to extremely downsize and live in something that's not even feasible for their family. So it is definitely, I'm not one to tell people what they should charge for rent, because I don't think anyone should control what someone can get for rent. The fact of the matter is there is a solution by buying a home and fixing your payment for 30 years. You're going to have a fixed rate. So definitely it does It doesn't have a direct correlation with purchases because you're renting, but it's definitely making people that are renting start thinking about, or at least looking into, what the possibilities are of home ownership, along with programs that Florida has for these, middle of the road income people that are making just, middle of the road median income, um, that just cannot afford to live here. Who's teaching our kids? Who's protecting our streets? Um, who's taking care of our bodies in in some ways, that, doctors and dentists, and, that have tons of student bills, and they don't know where they can go, and the rent is outrageous. So this is affecting a lot of people here, especially here in Florida, with the influx of some of
Yeah.
these bigger states like California and New York, where people were, selling their homes for, double of what they're buying homes here for, and they were outbidding people. So it's been a pretty crazy roller coaster ride over the last few years, um, and
Well,
down here, number one state people are moving to, or in the top three, anyways.
well, clearly these horror stories of rent that we're hearing made their way to the ears of the General Assembly, because otherwise they wouldn't have been making pass such a huge bill for this. So the big news in this bill is the very drastic changes to the Hometown Heroes program. We got on here, Chris. It was this time last year, actually. Excited talking about the Florida Hometown Heroes program because it paved a way for people in roughly 50-ish industries and career paths to be able to step into home ownership. And with this revamping, they have moved it from a career-based one to more of an income and first-time home buyer based one. So that 50, that list of 50 that can qualify, it's out the window. Now it's moved and changed drastically, which I know, you'll get into kind of some of the requirements on that. So Chris, the Hometown Heroes program, give us an overview of what it was and what it is now,
Yeah. So, I mean,
or will be, I should say.
what it will be. So, previously the program was designed to, be available for people with certain professions, mostly considered frontline workers, things that kind of ring the bell here: police officers, firefighters, doctors, some medical professionals. But, with widening the eligibility from a career-based assistance to an income-based assistance, now just opens it up even more. The program was amazing in itself because traditionally a heroes program was almost narrowed down to only like 5 to maybe 10.
Yeah.
And it was literally just police officers, doctors,
Military,
firefighters,
yeah.
teachers. And it wasn't spread out to, like, the dermatologist or the dentist or the chiropractor or the massage therapist or, the teaching assistant. So it just brought it up to 50 different professions within there, which that's a lot of people. If you just think about your communities, and you think about 50 different professions within there, that just opens up this opportunity to a lot more people. And then opening it up to an income-based assistance, it even makes it even better, because before it was kind of the income base was a very low and minimum to almost get in, and I think it's 150% of the median income, which now moves it up to, from 80 something thousand of household income up to maybe 130, 136, which is more in line with what you're seeing here, especially if you have two incomes coming into the home in a lot of these markets.
Well, the average in Lakewood Ranch, Sarasota, the average income's isn't it like 120,000 or something like that?
Right.
That's close. It's in the ballpark. So
It has to be. I mean, the median home price in Lakewood Ranch, for those of you watching, is I think it was, the last time I checked, which was a little while ago, was 610,000. The median home price where I'm from, up in New England, was 300. And that's double. That's the median. So, I mean, you're looking at the way that Now, if your house is the median house price is 600,000 and I'm a teacher making 60, $70,000 a year, how do I afford a median home price? And maybe on the low end, they're 400, maybe in the threes. Maybe if you're lucky, you can find that. I don't even know if you could find something. I'm not going to be able to afford. So now what happens is we have teachers having to drive in to certain areas to be able to afford a home. And these are the people that, we're counting on to, teach our kids. If they came and live in the neighborhoods that we have, they can't even live in our communities because they can't afford to. That hurts us. That hurts all of us. So by the governor, DeSantis, I think it was March 29th that he signed the Senate bill. I think it was a Senate Bill 102 to live local, the Live Local Act. Live local. I work local. I want to work local and I want to live local. I don't want to have to drive 40 minutes to my job because I can't afford to live with where the people I serve.
And obviously they saw it as important, not just, the frontline workers, but a lot more than just the frontline workers, right? Can you get into that for us?
Well, I don't have the list right in front of me, but I mean, it goes down to just, people who are even working as an assistants in the schools and, doctors' offices, people that typically didn't have any opportunity, and maybe those incomes are even lower, but have the opportunity to have a program that are made available for household incomes that don't exceed that 150% of the state median income or the local median income is unbelievable. And it's an awesome opportunity that obviously isn't getting out to the masses because a lot of people don't know about it. And they're still sitting and they're struggling and they're renting or they're living somewhere far away where now they just allotted, I believe, another $100 million on top of whatever. I don't have the number, folks that are watching. I don't have the number of what was spent so far. And Mindy, maybe you know that number, but
it was a fraction of what was, I did see it and I'm blanking, but it was a fraction of what was allotted to it last year. Which I guess it kind of makes sense. Well, yeah, it kind of makes sense because when the way the program was set up in 2022, it was limited to, just these 50, career paths. So it makes sense that not the whole $100 million was tapped into. I want to say, don't quote me on this, I want to say it was under 20 million. So literally a fraction of what the potential was. They appropriated another 100 million, like you said, and I think we got a really good chance of seeing more of this money being tapped into because now it's not just these 50 people. Now it's anyone who is a Florida-based employer is how they define it in the law. That Florida-based employer.
You have to be a Florida resident, right?
Yep.
You have to be employed full-time by a Florida-based employer. So moving to Florida and employed by a Florida-based company. Now this opens it up from what was the original program was $25,000, right? To now $35,000 that can cover, the 5% down on most conventional loans, or if you're doing an FHA loan, it's a 3.5% down, right? But you can receive up to the 5% of the purchase price, and it's capped at $35,000, which, it basically, that almost caps you out. If you would still have closing costs, I think the loan limit is $627,000 and change for a conventional loan. So that pretty much puts you almost at the $35,000, but that's your whole down payment on a $600,000 house. I mean, now you got to maybe come up with some closing costs. But in some cases, if you're buying something smaller and you're buying something, say, for, $400,000 or a little more, that might cover both of your down payment and your closing costs. So very little out of pocket. Maybe you have to pay an upfront for an appraisal and a home inspection, but that's a lot less than first and last in security on a rental that you're paying $3,000 a month for. So it really absolutely opens the doors to so many opportunities right here for many new Floridians and existing Floridians who have been renting. as long as it's your first home. You know, that if what's defined as a first-time home buyer, someone who hasn't bought a home in the last 3 years. So maybe you moved down here from somewhere else and you've been renting because you're like, oh man, first off, you've seen the prices go up so fast. And you're like, man, I thought I was going to buy something for X amount. Now I don't think I can afford anything. And then you just get whacked for year 2 with an up in rent. And then in year 2, guess what else happens? Not only are prices higher, but the interest rates just double. Now you're like, I'm stuck. But you're not. We're not stuck anymore.
Well, we're let's see, we're 2023 now. We had that big influx of people in 2020, right? So we're getting, if someone say sold their house up in the north in 2020 when they moved down here, like we're getting around that time where there's going to be a huge chunk of people who will be considered first-time home buyers based on, you know, the definition of it.
Exactly. That's exactly it. So another thing is you have to work a minimum of 35 hours a week. So just be a full-time person. Now, the nice caveat for this program that exists is for that doesn't apply to just a first-time home buyer is if you're in the military, you're active duty. So you don't need to be a first-time home buyer to take advantage of this program. Now, that VA loan, I believe, is the best program out there. These men and women who served our country and are, you know, with our armed forces, I believe they all deserve home ownership. And when you can get financed at 100% and now get that money for the down payment assistance, now I got to be clear about it because everybody thinks it's free money, but it's just say it's the 5%. It's a 0% loan, so it's non-amortized, okay? It's a non-amortized 30-year deferred second mortgage. And what does that mean? It's a deferred second mortgage. So if you're buying a $500,000 house, that $25,000 is on the back end. You don't pay it. There's zero payment on it, but at time of if you sell the home, they're going to call that note on you. However, it's still money that was given to you at 0%. You didn't have to pay a price for it. You didn't have to take it out of your pocket. It was just put on it. So it was a gift on the front end. So if you plan on staying in your house for a long time, you're going to get that equity and you know, you're walking in with equity that you got to end up paying back, but the above and beyond that it grows over the years, that's your money.
And oftentimes, you know, we can't guarantee this, but a lot of times with the way that, you know, you buy into your house and then the way that the home price continues to rise, it's not unreasonable to expect that after a handful of years, you would expect the equity in your home to outweigh that $35,000 or however much the amount was you received to, I guess you'd have more equity than what you have to pay back in that. So even though it's not, you know, free money, it's still a win. Very much a win.
It's money that you don't have to borrow or I don't want to say borrow because we don't want you borrowing the money. It's not a gift from your parents. I mean, I know my parents wouldn't have been able to give me. I have a lot of borrowers and a lot of clients that get gifts from family members, but the majority of people, I know in my case, my parents weren't there to give me, you know, a gift of 3.5% down on an FHA loan or 5%. So this is a really gift from our Florida government, right, to get you in a home and opening it up not just to our frontline people that are serving our community, but now open it up to people to live local that are working here, that are moving here, first-time home buyers down here, opening it up to you and giving you a substantial amount of money to go forward. I mean, to buy a $600,000 house and not have to come out of pocket with your down payment, that's a gift. I can understand, right? Most of us listening, I can understand, okay, I'm buying a low income house for $250,000 and someone's going to bless me with 3.5 or 5%. We're talking, you can buy the top tier home at the maximum amount and get the money to put down on it right now. And you can always refinance if you don't like the rate today. But what you can't do is what we're seeing still. We're still seeing, in some cases, there's bidding wars. People are overpaying what the purchase price is. We're seeing that again, only because the rates dipped a little bit. I mean, for those of you that were in the market a few months ago, you were seeing rates in the sevens. We can see rates as, you know, We've seen them over the last month in the low sixes. So you start seeing those rate changes, you have more people coming back into the market. And when you have more people coming back in the market and low inventory, what do you have? Supply demand issues, right? So take it now, because chances are in a year from now, the house will still be worth more. And you can always, again, as we beat this like a dead horse, date the rate and marry the house, right? We don't want to keep beating it. But this, one of the main factors, I'm going to hit some bullet points just to kind of reiterate everything we just talked about, because we just fed you with a fire hose. But this plan goes into effect on July 1st. It was signed on March 29th. It goes into effect July 1st, 2023. Now, if you are a first responder or one of these frontline workers, you can still get the $25,000, and that pretty much can cover both your closing costs and down payment. So we don't want anybody just waiting for that. So if you're in that 50 bucket, you can still go for this program and get what you need, pretty much cover all of it. But if you're now somebody that's working for, a Florida-based company locally here, and you fall within this income requirement, that 150% median income, both statewide and local, this is going to be available to you. So this is something, if I was in someone's shoes that could be a first-time home buyer, I would be reaching out to my lender. For one, your credit's good for 90 days. Maybe you're not pulling the credit yet, but you're looking to see what you can get pre-approved on based on, or pre-qualified for based on your income. If there's anything that you can do, you can get a soft pull on your credit. There's a lot of companies doing soft pull, so you're not going to get hurt. So we can get an idea of what your debt to income is going to be, and get you prepared and get you ready to make that purchase come July.
Chris, mortgage consultations with your team are totally free, right?
Totally free. And that's not just with me. Again, we're not using this just to advertise. I want to be educational. But most of us, we're going to do a free consultation, right? Most lenders out there. Get yourself a free consultation. See where you're at. See what you can afford. Because I guarantee you, to have price certainty for 30 years is going to be a big deal, especially here in our Florida market, because people are still coming in fast and furiously. I don't know what the number count is now, but it's well over 1,000 a day are moving here. And all that does when you have low supply is it just keeps raising prices up. It's going to just continue to keep those prices up and not down. The average homeowner across the country has 30% of equity. So if you're sitting on the sideline thinking you're waiting for a crash, I'm telling you, I wouldn't advise that, because chances are people aren't walking away from that equity that easy. And what goes up must come down. We've seen it over the last 26 years in this business. So let me kind of go through the things that we talked about. One, if you are a frontline worker, the current plan is still there. It's $100 million that was put aside to help any frontline worker. There's 50 people. You can go to mortgagestreams.com, go down and scroll down to the first Hometown Heroes blog, and there's a link in there that you can pull up all those job descriptions on what's covered.
We will link it in this video
and we'll also link it in this video, and we'll also probably link it on this blog as well. Yep. Second thing is they're increasing that number to another $100 million, and it's going up to 35,000. And this is going to allow people that are working here in Florida and living here in Florida to the ability to buy a home, and it's actually giving you a little bit more money. Why? Because if you're a first-time home buyer and you're making more income than a teacher would, this is the job. This is an opportunity for you. Maybe you are able to afford a bigger house because it's not income driven. It's really based on where your career is, what you're doing, and you're a first-time home buyer, right? And you're going to be living here in Florida and working in Florida. Live here. That's what it is. What did he call it? Live local.
Live local act. A little bit of a tongue
local act. You're going to live here. We're encouraging people to live here. The free state of Florida, right? Calm down. Get this money. It goes on the back end of your loan and is 0% non-amortized 30-year deferred second mortgage, right? It goes on the back. And this allows you the opportunity that you may not have thought you had. And all you got to do is call somebody, get a consultation, see where you're at. And maybe it's not for the 600,000, maybe it's for the 350, 400. I mean, there's ways to look at what you can afford, what the step up is. So I look forward to hearing from any of our partners who would love for me to come in and discuss this in your brokerage shops. We can do classes on any of this stuff to educate you as not only customers or home buyers or frontline responders or frontline workers, but as people in the real estate world and industry, realtors, financial planners that are working with people that are renting. And you're seeing that, man, they don't even have a tax break on a mortgage interest. They're just paying rent that they're throwing away. And it's more than what they would pay on a mortgage. And you want to be that value add to your clients, call me and I can educate you and hand you some materials that you can show to your clients that would benefit them at the end of it.
Well, one unspoken thing that not a lot of people are talking about, if this program is successful, if this Live Local Act, and it helps people not have to go to outside, more affordable areas, they can stay in their own community. Here's to hoping traffic on 75 might get a little better.
Is you can get to the beach in 40 minutes instead of 55.
Right. Well, Chris, thank you so much. We're going to be pumping out a lot more information about this. So obviously, we still got, a couple months before this officially goes live. Chris, real quick, can you give us an idea when roughly, if someone knows that they're going to qualify for this, let's say they don't qualify now, but they know they will when it goes live, when roughly would they be looking to do that application?
Well, your credit is good for 90 days. So with a pre-approval, you're good for 90 days. So even if you were to get started, say May, June, July, you'd have all of May, all of June, and you would have to close somewhere in July, after July 1st. That credit in that, your credit report would be good. However, you can always do a soft pull now and just figure out what you need to do to get qualified and then pull it in June or even in the beginning of July if you want to wait. However, with this is such a great incentive. I don't know how fast $100 million will go now that you just opened it up to another 30% of the population.
Right.
In Florida. That 100 million could go really quick, or could not. But if I was somebody who wanted to take advantage of this opportunity, I would do it sooner than later. And if you started somewhere in May, then you could still not have to re-pull the credit again and still get in that house by the end of July and still be good with your approval.
Awesome. Well, Chris, thank you so much for being here and sharing with us. For all of our watchers, or excuse me, all the people watching and all the people listening, like I said, stay tuned because we'll have more information pumping out over the next, several weeks about this. So, Chris, we will be here again next week, same time, same place, as always.
And we will we're going to start bringing on some guests. So, if you're loving our channels, please, it helps me out, helps us get the word out more. It gets us more traction. Like us on Instagram, friend me on Facebook, like us on YouTube, get on our, subscribe to my YouTube channel. Just go on and click it. Even if if you're watching it on Facebook, it really helps us out, get our word out and get our messages out so we can help more and more people. So thanks for watching. I look forward to seeing you guys next week.
Thank you, Chris. Everyone, have a wonderful rest of your week and a wonderful weekend.
Bye.
Bye-bye.